I think the bond market will remain a phenomenon and a temporary fix, because I think in general in a functioning bond market it works well for for corporates. It works well in the high yield bond market space, but I don't think that bonds are the natural source of financing for real estate and real estate companies at the moment, because they're usually too expensive, because you get a lot better deals in a normal market environment from other sources of financing. At the moment, it seems like there are opportunities where bonds can be advantageous to other financings. And especially in Germany, we have this sort of little people's bond market where people are placing, 50 million or 100 million bonds on exchanges with basically no collateral and stupid buyers who will probably lose a lot of money on that. So that's a temporary factor. When you look at CMBS, my clear conviction is that that they will come back, because I think theoretically the model makes perfect sense. I think that people, especially the legal profession and the investor profession, has learned a lot about how to not document a CMBS through the difficulties that came in working out these CMBS. So a new generation of CMBS will have a lot of things in mind that people have gone through now and experience pain. And they'll have solutions pre-packed in the documentation for CMBS. And I think it's a natural to sort of get properties out on the street together with the capital markets. And for that, CMBS is just the best tool. And it was sort of abused in certain countries in certain times, and not thought through enough what happens if things get a macro shock and things change. But maybe they have to rebrand it and give it a different name. And then again, that will, I think, negatively reflect on the debt funds, because I think that CMBS will eat their breakfast, because they just once they're accepted as investments again in the institutional community, they will be back and they will take a much bigger share, because I think it's a more efficient tool to basically get the capital in the property market.
So some of the capital that is at the moment finding its way in, either through direct investments or through funds into the debt space, you think if CMBS was back, then they would take that as the preferred route to access real estate in that way?
That's my opinion.
Okay, interesting.
But again, I don't have a crystal ball.